Are you or someone you know looking to buy or sell a home? When you use a HomeGain Realtor to buy or sell a home, you can get $150. Visit HomeGain.com and click on the Promo 150 banner at the top of the page to get started. Compare HomeGain Realtors and choose your favorite. Complete your home purchase or sale transaction with a HomeGain Realtor, and HomeGain will pay you $150. Get started today by going to HomeGain.com.
Welcome back, Washington, D.C. Metro to Real Estate 360. I'm your host, Ryan Sloper, joined by my guest, Louis Cammarosano, the General Manager of HomeGain. Quick reminder, Real Estate 360 is designed to build the Washington, D.C. Metro's housing and credit markets one house at a time. If you ever have any questions, concerns, or real estate needs, the best number to reach out to us is 877-245-2030. That's 877-245-2030. Or if you prefer to go on the web, our website is realestate360live.com. That's realestate360live.com. On the right-hand side, there's an Ask a Question button. Just fill in your contact information and your question, and we will get back to you as soon as possible. As I stated before the break, FHA is basically setting the stage for a potential treasury draw because their losses have been mounting. Many of the losses are coming from loans made from the years of 2005 to 2008. And for those of you not familiar, FHA is basically a government-backed mortgage insurer. They insure all of these loans. Basically, there's an upfront mortgage insurance premium as well as a monthly insurance premium that they pay, and they have to keep, so much in reserves per, their mandate by Congress. And it looks like, they're obviously having a tough time staying afloat. It's going to be interesting because the president had said numerous times that he had other plans to try to use FHA in an expanded role to help people that were upside down or unable to be helped by the other program, HARP 2.0, which are people that currently have mortgages that are owned by Fannie Mae or Freddie Mac. So it's interesting, Louis, because you have all these different entities at this point that basically don't have any money, but yet they want to continue to expand government programs and push them on there. If they're not profitable now and you're asking them to basically probably take losses on these government programs that they're trying to push out there to people, where's this money coming from?
Well, Ryan, add on top of that, you're just talking about one particular federal agency, add on top of that Social Security, Medicare, food stamps, the military budget, then you got Freddie Mac, Fannie Mae, Sallie Mae with the student loans. And this is an issue that no one talked about during the debate. It's our biggest issue, which is the amount of debt that the United States has. And no one wants to talk about it because you start talking about making cuts. Austerity is not popular. And then they start to have economic arguments that austerity is somehow going to ruin the economy, and that's like saying the medicine is the cause of the illness. And austerity is not a recipe for economic disaster. It's actually the cure.
Right.
But, we're not talking about those issues at all, and we're talking about how we can support these programs more. Every program that we have is somehow the most important program, and we can't cut it because if you cut it, there's going to be suffering, and that's true. But
yeah.
We have to decide where we have money and where we don't, and in most instances, we don't have the money. And the only way you can raise the money is you're going to have to raise taxes, and you can't just raise taxes on millionaires and billionaires. There's not enough money to tax just that group. Or you can print money from the Federal Reserve, and that is a tax in and of itself because it acts in an inflationary capacity. So really what has to happen is these programs have to be looked at as to whether they're useful or not, or efficient, and in most cases they're not, and they have to be cut. But no one's saying that. And the whole presidential debate, you didn't hear any of that kind of talk.
I didn't hear them mention not even one. Not even one.
Other than once Ron Paul dropped out, you never heard it, and even when Ron Paul was in, you didn't hear it because they didn't cover it.
Yeah. Yeah, and basically everything that they came up with all basically was amounting to that they were going to have to spend more money on something else. Yeah, you could take it away from one place. They never mentioned where that was to then put it somewhere else. And, I mean, just for FHA, for instance, which we were just discussing, the agency now insures about 7.6 million loans with the total outstanding balances near $1.1 trillion, which is triple the amount that it backed 5 years ago. Anytime, I think we've seen this time after time, the more government involvement that we have, the worse things get.
And the more expensive things get. Look at
the more expensive things get. Yeah, and people are complaining.
Housing and education have gone up, or housing's gone down, but they created a bubble in housing by making loans readily available and keeping interest rates low. They've done the same thing with the student loans. And if you look at areas where government's not involved, one of the classic examples is LASIK eye surgery. That goes down every year because it's not covered by insurance or any federal program. Same with computers. Imagine if there were federal loans available to buy computers. Computers would be $20,000-$30,000 each.
Yeah,
because they can get away with it because people would have guaranteed loans, and the computer manufacturers would just raise the price.
Yep, and that's exactly what FHA has done over the last year. I mean, they keep raising the upfront mortgage insurance premium and the monthly insurance premium to the place almost where, even though you're going to get a 3% or 3.5% 30-year fixed mortgage with that insurance that's added on to it, it's putting it right back up to where it would be a 5% interest rate. So, it seems like a great deal because you're able to get, a low down payment, 3.5%, there to help first-time home buyers and people that don't have a big nest egg built up.
What's interesting is there's an example where the government who interferes to try to keep interest rates low, and their same action actually pushes interest rates higher because the other agency charges higher fees.
Yeah, and then so get this. So now they have.
And then they lose money because they don't have enough fees.
Right. So they're losing money, and then
for more.
The biggest kicker to all of this is also the fact that so they're insuring these loans, but they're still the banks that actually have to they have to originate these loans. Well, if the bank then has too many loans that they originate that are defaulted on, FHA can just cut them off. They can just say, well, you have too many bad loans. We're not going to let you originate anymore. So then you have lenders being extra cautious because they're scared that they're going to get their FHA privileges stripped away from them. So, a first-time home buyer that's kind of on the cusp that really needs some help, and, they're not going to approve that loan. So, the program is intended to help these type of people, but in the end, they're hurting them. They're raising up the credit score requirements for them. So they don't really – they're saying that they want to help these people, but they really don't because their actions are proving so. I mean, it started out where FHA, you needed basically like a 585 minimum credit score to qualify. Now, there are some lenders that will do them, but very few. Most of them now are about 640. So now we've moved almost 60 points, and all the time they're raising insurance premiums, they're raising credit score requirements. So everything that they're doing is not helping the housing market. And
if you think about the people who work there, their number one goal is not really to help people. Their number one goal is to maintain the agency and to maintain funding for it and to try to get increased funding for it. Because if they were in private industry, they'd go out of business. So they're not concerned about helping more people and doing it efficiently. They're just worried about how they can position themselves to say they're doing something so they can ask for more money.
I totally agree with that, and it's sad because everybody's like, well, what is Romney or what is Obama going to do to help me? Well, at the end of the day, there's not really much that they can do because
they're interested in getting, and this isn't a cut on Obama or any other politician, it's just a cut on politicians in general, is what is Obama going to do when you don't have food and water in New York? Right. Well, he's going to say he's going to give a speech, he's going to show up for a couple of minutes, and then he's going to go back on the campaign trail.
Yep.
Because his job is to get reelected in his mind. His job isn't to do his job because, unfortunately, the presidency is set up. You get elected for 4 years, and from day one you start campaigning to get reelected. And basically, if you want a job in government, it's not so much producing results. It's whether you can get funding or for your agency or you can get reelected. And look at Fannie Mae and Freddie Mac. Those guys got bonuses after they drove those companies into the ground.
Yeah. And, the harsh reality to me is that many people are going to place their vote. Many could be distressed homeowners at this point that are facing foreclosure, and they're, going to cast their ballot for who they feel is going to help bail them out of their situation. And I have news for you. Neither one of these guys is going to be able to just all of a sudden just, say, hey, bank, you're not going to foreclose on them anymore because we have this government program.
If you think a president of 300 million people is somehow going to, help you, you're delusional.
Yeah, but the way that the ads are run on TV and the way that these debates are all set up, like the modifications that have supposedly helped so many people. I mean, I think to date it's only about 1.9 million modifications, of which pretty much 50 to 75% of those are failing.
These programs help politicians get elected, and they help people who work for those agencies keep their jobs.
Right. So, many are going to say,
incidentally, they might help somebody.
Yeah, exactly. There will be a few that do get helped in the process, and I'm happy that those people actually did get the help.
And they'll make hay out of that. They'll interview that person, and they'll make a big deal out of it.
Yeah, and then they see that story on the news where somebody got a loan modification down to 1% or 2% for 30 years, and it seems like it's the greatest thing since sliced bread. And then they go try their hand at it. And they tell the person, "Oh no, you don't qualify because your qualify ratios are too high. I'm sorry, but we'll send you to the next department that might be able to help you out with a short sale."
You see, that's the advantage that government has, is they can always show their successes, but they can't show they don't show the things that aren't successful. So they kind of control the game, where they can say our programs are working. They can always interview somebody who got food or water during the hurricane. They can always show somebody who received some benefit, but what they can show is what would have happened if they didn't get involved.
Yeah, and I will say that the HARP 2.0 program, the one now, it gives you an unlimited combined loan to value. So if your loan is owned by Fannie Mae or Freddie Mac, which right now, let's see, we've got Fannie Mae, which holds 34% of all mortgages, and Freddie Mac that controls 22%. So that's a total of 56%. Your loan has to be owned by Fannie Mae or Freddie Mac. You can refinance and don't have to worry about being underwater. Now, that's great for 56% of the people, but what about the other 44? And many times, the people that originally, applied for the original HARP 1.0 program aren't willing to have to deal with the bank all over again, because it's not sometimes as simple as people think to get these things done. They don't even bother to go back because they didn't have success the first go around. So, I mean, if you are in that situation, your loan is owned by Fannie or Freddie, I would say definitely reach out to me, and I'll put you in contact with a lender that can help you out, because those are the people that are able to take advantage of that at this point. We're coming up on a break, guys. When we come back, we'll let you know how many delinquent mortgages actual Fannie Mae and Freddie Mac holds at this point in time. When we come back, stay right there.